Recording in progress.
Okay, ladies and gentlemen, good afternoon from Jakarta, Indonesia. Welcome to our webinar today, a collaboration of the ASEAN Federation of Accountants, or AFA, our member organizations, ACCA, and the International Accounting Standards Board, or IASB. My name is Oki Pratama, Executive Director of AFA, and I will be your host for today. Now, on behalf of the organizer, it is truly an honor for me to host today's webinar on IFRS for SMEs, ASEAN Outreach on Proposals to Update the IFRS for SMEs Accounting Standard. It is indeed a privilege for us to have the opportunity today to hear firsthand from and engage with representatives of the IASB, and of course share our preliminary thoughts on the proposed changes to the standard. Allow me to take this opportunity to welcome our experts, representative of the IASB, the ASEAN Professional Accountancy Organizations, or PAOs, and of course ACCA. And thank you for allowing your time to be here with us today and share your expertise and insight into the standard. Ladies and gentlemen, before we begin, please allow me to highlight the following housekeeping matters. So to our presenters and panelists, kindly change your name if you have not done so. So if you can change your name to name_institution, for example, Oki_AFA, so we could identify you throughout our discussion later. To our presenters and panelists, kindly keep your microphone on mute unless you are invited to speak. To our audience and observers, we would be more than happy to hear from you. So please do not hesitate to share your comments on the consultation. And this could be a response to any of the specific questions that we will be looking at today, or any part of the exposure draft in general. So kindly use the Zoom chat function to submit your comment. To our audience and observers, we would like to hear your feedback as well to our webinar today. A link to a brief post-event survey will be provided towards the end of the webinar, and your response is very much appreciated. And last but not least, please note that this webinar is being recorded, so your participation today represents your consent for the organizer to use the recording of for our documentation and communication purposes. Okay, ladies and gentlemen, to quote the chair of the IASB, Andreas Barco, the IFRS for SMEs Accounting Standard has always been about keeping accounting requirements as simple as possible, and of course, cost-effective for eligible companies. And these proposed updates respond to the feedback on how to keep the standard current while maintaining its simplicity. The IASB's ongoing consultation on the proposed updates to the IFRS for SMEs Accounting Standard is very much relevant for a region such as us, Southeast Asia. ASEAN SMEs are the backbone of our region's economy, and a part of our role as ASEAN accountants is to support the SMEs in presenting their financial information according to an accepted global standard. So it is important for the IASB to hear from representatives of our ASEAN stakeholders today. Ladies and gentlemen, to start our webinar, please allow me to invite AFA President, Mr. Vorawit Jantanaku, to deliver his welcoming address.
Dr. Chiang Chiu-Lu, distinguished member of the International Accounting Standard Board, or IASB, Ms. Michelle Sampson, technical staff of the IASB, representatives of the ASEAN Professional Accountancy Organization of PAOs, leadership, members, partners, and stakeholders of the IASB, Alpha, and ACCA. Ladies and gentlemen, greetings from Bangkok, Thailand. On behalf of Alpha and our co-organizers IASB and ACCA, it is my pleasure to welcome you to our first webinar for 2023. Today's webinar serves as an outreach also to update the IFRS for SMEs Accounting Standards. It is a valuable opportunity for the ASEAN stakeholders, represented by our member organizations, the ASEAN PAOs, to engage with the board and share their preliminary feedback on the proposal updates. For Alpha, it is part of our ongoing effort to facilitate and contribute to adoption and implementation of international standards in ASEAN jurisdictions, including IFRS. Ladies and gentlemen, micro, small, and medium enterprises are integral part of the ASEAN's economic growth and development. According to ASEAN, there are 70 million of these businesses in ASEAN, accounting for between 27 to 29% of total establishment in the region. Regionally, the MSMEs contribute 85% to employment in ASEAN, including to a varying degree the IFRS for SMEs Accounting Standards. The proposal to adapt the standard are aimed to reflect improvements made to full IFRS accounting standards. Despite of this proposal, it is important to ensure that the standard will remain suitable for the SMEs. I am encouraging you to actively observe and, where possible, share your thoughts on the proposals. After today, I urge you to discuss with your constituents and submit your feedback to the proposal draft. This is important to make sure that the voice of the ASEAN stakeholders will be heard in the board's deliberation of the standard. Ladies and gentlemen, I shall conclude my remarks today by thanking once again, 1. Our co-organizers, IASB and ACCA. 2. Our experts, Dr. Sieng Chiu Lu, Ms. Michelle Sanson. 3. Representatives of the ASEAN PAOs. 4. And our audience for our participation today. I thought you will find today's sharing and discussion informative and useful. Thank you.
Yes, thank you, President Warabit, for your address. Of course, facilitating and contributing to adoption and implementation of international standards in the ASEAN jurisdictions, including IFRS for SMEs Accounting Standard, is indeed part of our priorities, as well as representing the voice of the region in global consultation on important issues such as today. So next, I would like to invite Dr. Jan Xiao Lu, a member of the IASB, to deliver his address. Good afternoon, Dr. Lu. Welcome, and the screen is yours.
Thank you, Mr. OK Pratama, and dear President Mr. Valavit Jen Tanako, and also dear colleagues from ASEAN member states. I'm very pleased to attend today's outreach meeting with the stakeholders from ASEAN region. And my name is Jian Jialu, a board member of IASB, and I'm today joined by Michelle Samson, one of our technical leaders team member. She's now leading the IFRS for SME project. First of all, I would like to thank AFA and ACCA for helping us organize this outreach event. Particularly, I would like to thank Oki Pratama for bringing the panelists from Asia countries together to discuss our proposals. As the president just now mentioned, that SMEs are important for many jurisdictions in terms of creating jobs, generating income, providing goods and service, and driving innovations, particularly for the ASEAN region. And he mentioned that currently there are over 70 million micro and small and medium-sized entities in ASEAN. I think yesterday I also, searched Google and read one of the articles written by Oki in 2019. And you mentioned in your article that SMEs are the backbone of Southeast Asia's growing economy. So I think that the financial health and the financial sustainability of those SMEs matter a lot, and accounting can play an important role. If SMEs apply the consistent accounting standards and provide high quality, comparable financial information, it would help SMEs improve its financial management and governance. It would help meet information needs from finance providers. And therefore, it would help SMEs raise money from banks and other creditors and lower the cost of capital. So what kind of accounting standards SMEs should apply? As you're all aware, one of the standards IFRS developed is 4 IFRS accounting standards. But the 4 IFRS accounting standards are designed for capital markets, particularly for those entities that have public accountability, such as listed companies and financial institutions. So requiring SMEs to apply 4 IFRS accounting standards, which now have more than 2,000 pages, I think would be costly, and the benefits of applying the 4 IFRS accounting standards will not be outweighed the cost. So therefore, IASB developed the IFRS for SME accounting standards, which is specifically designed for those entities without public accountability, but need to prepare general purpose financial statements. And we issued that standard in 2009, and the standard is based on 4 IFRS accounting standards, but simplified significantly. It has only over 200 pages and easy to be understood and implemented. By now, the IFRS for SME accounting standards has been applied in more than 86 jurisdictions worldwide. It is particularly welcomed in developing countries and emerging economies. After the standards was issued, the IASB conducted the first compliance review and made some changes to the standards in 2015. In 2019, the IASB started the second compliance review of the standards. And as a result, we issued an exposure draft of the 3rd edition of the IFRS for SME Accounting Standard in September 2022. The comment period will end March 2023. The exposure draft included some major changes, and we have been conducting series of outreach activities, including today's event, to consult with various stakeholders on the proposals in the exposure draft. Considering the importance of SMEs in ASEAN, and some of the ASEAN countries have already adopted or have some kind of plan to adopt IFRS for SME accounting standards, I think your input and comments on the proposals included in the exposure draft will be extremely helpful. So I hope, building on the comments and the suggestions from you and the stakeholders from your other region, we can further improve the quality of IFRS for SME accounting standard, and therefore support the SME's role playing in the economy, like in the backbone of the ASEAN's growing economy. So finally, once again, thanks AFA and ACCA. I'm looking forward to the discussions and your comments and input today. Thank you.
Thank you, Dr. Lu, for that address. AFA certainly recognized the IASB's consistent effort in promoting adoption and implementation of IFRS as the globally accepted standard for financial reporting. Today's webinar is another example of our support and contribution towards achieving that goal. So hopefully you will hear a lot of insights or useful insights and hopefully inputs from our constituent as well today to contribute to your further the board's further deliberation, especially for this particular consultation. So thank you for that, Dr. Lu. And last but not least, I would like to invite Mr. Pulkit Abrol, Managing Director for Asia Pacific of ACCA, to deliver his address. Welcome, Pak Pulkit.
Thank you, Pak Koki. A very good afternoon or good morning to our colleagues in AFA and IASB, all the speakers, representatives from various jurisdictions in ASEAN, ladies and gentlemen. It's such a great pleasure to be with you here today. ACCA is delighted to co-organizing today's meaningful discussion with AFA and IASB. And I would like to echo the warm welcome by President Warawit and IASB board member, Dr. Lu. Thank you for joining us in this important and timely event. Today's discussion addresses a critical issue for ACCA and our members. It is about how SMEs, which, as we have mentioned, represent the overwhelming majority of businesses and critical supply chains worldwide, including in ASEAN. And many of these can be supported to embrace good quality corporate reporting. Given the critical role small and medium enterprises play in the global economy and their impact on society and the planet, this is an important endeavor. All businesses, industries, commerce, and finance ecosystems benefit from the drive towards common standards. All businesses, therefore, must get the chance and seize the chance to share in these benefits. How we achieve that is the question that lies before us today. ACCA has been a long supporter of IFRS for SMEs. Implemented properly, it should add credibility to the financial statements of unlisted companies. That brings enormous benefits for potential investors and others who need to rely on the figures that they see. It should also make it easier to compare small and medium enterprises' financial statements amongst other small and medium enterprises and with those companies that are using full IFRS. Depending on the facts and circumstances, it should also simplify the training of accountants, including those working in small and medium practices. The current version of IFRS for small and medium enterprises is primarily based on the same accounting principles as the full IFRS, with some simplifications in accounting treatments and reductions in disclosure requirements. These simplifications should only reflect the different cost and benefit effects for small and medium enterprises and the different needs of the users of these financial statements. Nonetheless, as the full IFRS standards evolve, there is a risk that IFRS for small and medium enterprises will increasingly diverge from them. ACCA believes that the two systems should be balanced appropriately. There should still be a system based on a common platform of accounting treatments, subject to appropriate considerations of costs, benefits, and different user needs. ACCA fully supports the comprehensive review underway for IFRS for SMEs currently being undertaken by IASB. It will ensure that the standards remain relevant for small and medium enterprises, and the users of these financial statements play a significant part in bringing greater transparency, clarity, and accountability for businesses everywhere. We are excited to see representatives from different jurisdictions in ASEAN gathering here today, and about 200 of us to share our views on the proposed changes. Given the importance of small and medium enterprises in our region, influencing the changes to the standards and getting the standards to land appropriately is crucially important. We look forward to an invigorating discussion. Thank you very much.
Yes, thank you, Pak Pulkit, for your address. We definitely appreciate our productive relationship with you and ACCA, and look forward to continuing this to future collaborations on matters relevant to our ASEAN accountants. So thank you as always. Okay, ladies and gentlemen, before we continue, I would like to invite all of our presenters and panelists to kindly turn on your camera, please, for a quick photo shot. So everyone, our presenters and panelists, so everyone within under the category of the panelists in our Zoom webinar room today, if you could please turn on your camera for a quick photo. Monica, if you could help us. Thank you.
Okay, ladies and gentlemen, on my tree, there will be 2 slides for photo group, 1, 2, and 3. Another slide, 1, 2, and 3. Thank you very much.
Thank you, Monica, and thank you, everyone. Okay, ladies and gentlemen, let us begin with our sharing today. I would like to first briefly introduce our 2 IASB representatives who will deliver a presentation to set up the context for our discussion, as well as leading and moderating our panel discussion. First, welcome once again, Dr. Jen Xiao Lu. Dr. Lu was appointed as a member of the IASB in 2017 and was reappointed to serve a second term in 2022. He joined the IASB from the Chinese Ministry of Finance, where he most recently served as the director of the Accounting Regulatory Department. Dr. Lu has made an important contribution to the establishment and work of the Asia-Oceanian Standard Setters Group, or AUSSG, and has also been actively involved with the IFRS Foundation for many years, including as a key facilitator of the IASB's Emerging Economies Group, or EG, and as a member of the Accounting Standard Advisory Forum. So welcome again, Dr. Lu. Next, I would like to welcome Ms. Michelle Sansom. Michelle joined the IASB in 2013 as a member of the technical staff, having spent several years building the board's relationships with national standard setters, including organizing the WSS conference, ASAF, and EEG meetings. Michelle moved roles to focus on standard setting and is now part of the technical leadership team. Prior to joining the IASB, Michelle was technical director of the UK Accounting Standards Board. And good morning to you, Michelle. Welcome to our webinar. And in addition to Dr. Lu and Michelle, we have with us a panel of experts, each coming from a jurisdiction in the ASEAN region, as well as our co-organizers, ACCA. And with all due respect, allow me to briefly welcome to the panel from Brunei Darussalam. We have Mr. Sazali Sulaiman, Council Member of the Brunei Darussalam Institute of Certified Public Accountants. From Cambodia, we have Mr. Pik Sopiakda, representative of the Accounting and Auditing Regulator, Ministry of Economy and Finance. From Indonesia, we have Mr. Dede Rusli, member of the Indonesian Financial Accounting Standards Board of the Institute of Indonesia Chartered Accountants. From Lao PDR, we have Ms. Panitip Fongsuli, Executive Board of the Lao Chamber of Professional Accountants and Auditors. From Malaysia, we have Ms. Rasmini Ramli, Executive Director, Digital Economy, Reporting and Risk, Malaysian Institute of Accountants. From Myanmar, we have Mr. Mokchau, Vice Chairman of the Myanmar Institute of Certified Public Accountants. And from the Philippines, I think we have Mr. Roel Lucas, Chair of the International Affairs, Philippine Institute of Certified Public Accountants, and he's also an audit partner of HGV. From Singapore, we have Mr. Lee Eng Kian, Deputy Chairman, Public Accounting Practice Committee, Institute of Singapore Chartered Accountants, or ISCA. He's also the Managing Partner and Head of Audit and Assurance for PKF Singapore. From Thailand, we have Mr. Udom Tanuratpong, Manager of Academic Division, Federation of Accounting Professions of TFAC. From Vietnam, we have Mr. Trinh Duc Ven, Deputy President, Vietnam Accountants and Auditors, and Deputy General Director of Accounting and Auditing Supervision Department, Ministry of Finance, Vietnam. And we also have Professor Chuk An To, Chief Editor, Vietnam Accounting and Auditing Journal VAA, who is also accompanied by Mr. Pham Ngoc Ong Teng, Head of External Relations of VAA, Vietnam. And last but not least, from SCCA, of course, we have Mr. Aaron Saw, Head of Policy and Technical SCCA. So once again, welcome everyone to the panel. It is certainly an honor for us to have each and every one of you on board this afternoon. And we look forward to hearing your insights into our topic today. So ladies and gentlemen, please do not forget to participate in this outreach activity by sharing your comments on the specific questions that will be discussed later, or any part of the exposure draft in general. Kindly use the Zoom chat function to submit your comments. With that, I would like to now pass the session to Michelle and Dr. Lu.
Thank you. Thank you. Taniko is going to share the slides, Dr. Lu, if that's okay with you.
Yes. Okay. Thank you. Okay, again. So now let's start from our main session. Our main proposals included in the exposure draft of the third edition of the IFRS for SME Accounting Standards. It's really a good opportunity for us to seek the views from the stakeholder in ASEAN region. And before I think I hand over to Michelle to talking about the details of those main proposals, I would like to briefly introduce the background of of this project, particularly on the overview of the IFRS for SME Accounting Standard and the objective of the second compliance review of IFRS for SME Accounting Standard. Please move to the slide 4. Slide 4, yes. IFRS for SME Accounting Standard, as I mentioned, that it is specifically designed for small and medium-sized entities, which are the entities that do not have public accountability, but publish general purpose financial statements. It is based on the principles from 4 IFRS accounting standards, but with a lot of simplifications. Particularly, I would like to mention is that when we develop those proposals, we really focus on the information needs of lenders and other users of SMEs financial statement. Because as I mentioned, the 4 IFRS accounting standards designed for capital markets, investors' needs may be the critical to 4 IFRS accounting standards. But for SME accounting standards, we really look at the information needs of lenders and other creditors. Particularly, we know that the lenders and other creditors are really interested in information relating to the short-term cash flows, obligations, liquidity risks, and measurement uncertainties, such a kind of information. When we consult the stakeholders developing our proposals, we first look at their information needs and how can we meet their information needs. So moving on to the next slide. As I mentioned that we conducted the first comprehensive review of these standards in 2009, and now currently we are conducting the second comprehensive review of IFRS for SME Accounting Standard. The objective of this review is to update the IFRS for SME Accounting Standard to reflect the improvements that have been made in 4 IFRS accounting standards, and while keeping the standards simple. So how can we achieve that? First, we sought the views by publishing a request for information in January 2020 to seek initial views whether and how we should align these standards with 4 IFRS accounting standard. Obviously, we also developed a framework, and Michelle will talk about the framework in details later, and apply the framework for deciding whether, how, and when to amend the IFRS for SME Accounting Standard. And finally, we apply the framework and considering the feedback on the request for information, including consulting our SMEs member, that is IASB's consultative group, SME implementation group, seek their views, and then building on all those feedback and the views from SMEs members, we proposed improvements to the IFRS for SME Accounting Standards and published the exposure draft last September. So that is the main background and main objective of the project. And with that, I would like to hand over to Michelle.
Thank you very much. And thank you very much for inviting us today. And as I just reiterate the thanks that Jing Chao made earlier on, I am going to provide a very quick overview of what's in the exposure draft, because as has been said, we are really looking forward to some meaningful discussions on the proposals. So when the board started this second comprehensive review, it had 2 significant questions that it needed to answer. One was what should be in the review, and the second was how should it undertake the review. Now, in terms of what should be in the review, so what should be the scope of the review, when the board had undertaken the first comprehensive review, it had decided not to update the standard for some recently issued IFRS accounting standards. So it needed to ask itself, should it go back and relook at those standards and include those standards in the scope of the review? Plus, it also had standards that had been issued from the first after the first comprehensive review up until the board started this project in 2019. And actually, the board decided that it would go back. But that means, if you look at this slide, that the breadth of this review is very wide, and it ranges from IFRS 3 that was, originally issued back in 2004, and the SME standard is based on that version. And then all of the updates that have taken place on that standard right through and the exposure draft includes all of the updates through to 2021 and through to the, more recently issued standards like IFRS 16. And of course, importantly, the Conceptual Framework. So given the scope of the review, on the next slide, we talk about how the board decided to undertake the review. And we really needed a way to help the board structure its discussions, because it was obvious from the outset that we had some quite polarized views amongst board members. Some board members said the SME standard is working, we should only update it for anything that people are telling us isn't working. So, for example, paragraph 28.19, where we've had quite a lot of discussions, whereas there was other board members who had a completely opposite view to that, who said the IFRS for SMEs is IFRS and it should be fully based on IFRS standards. Somehow we needed a way of enabling the board to have a discussion, and we came up with what has become known as the alignment principles. So we asked the board, when it was considering any standard, the first question to say is this relevant to SMEs? So if we updated the standard for this change in IFRS standards, would it make a difference to the information and the decisions that users make? And only if the board was able to say yes to that question, would it consider how it updated the standard. In the second principle, what we call the simplification principle, the board says to itself, how can I simplify this IFRS? How can I take into consideration costs and benefits, the resources that SMEs have available to them, the needs of those users, excuse me, and simplify this standard. And then after it's come up with a number of simplifications, it stands back and it looks and says, do I still get a faithful representation? So is the outcome of reporting this transaction still providing a faithful representation of the economics? And we've applied those principles to all of the amendments that we are proposing in the exposure draft. So if we move forward, I'll talk about the main proposals and those standards on slide 9 that the board is proposing to update. So these are the standards that the board is making changes to the IFRS to SMEs for. And in the center of that is the Conceptual Framework. So in 2018, the IASB issued its revised Conceptual Framework. Now, the IFRS standards are based on and are derived from the principles that are in the Conceptual Framework. So the first question was, should we update the IFRS for SME standard for the Conceptual Framework? And the answer was clearly yes. So there's a proposed new section 2 of the standard, which is based on the 2018 Conceptual Framework. And then looking at some of those other standards, IFRS 15, clearly that's a very pervasive standard. All SMEs make money. This is about how they recognize the revenue. We took IFRS 15, we did a lot of work, a lot of research with our SME implementation group, with some of the small preparer firms, and have proposing a new section 23. The new section 23 uses the 5-step model. So we've restructured the 5-step model, and then we've brought in a number of simplifications from IFRS 15, things like variable consideration. So we'll focus on what variable consideration will become due, warranties, rather than having to search for warranties, we'll say if the warranty is significant. So a lot of simplifications have gone on in developing the new section 23. IFRS 3, we had quite a lot of discussions about step acquisitions. Should we bring in requirements for step acquisitions? Do SMEs undertake step acquisitions? The advice we got from our SME implementation group was yes. So we've brought in some new requirements, or proposing some new requirements for step acquisitions. And then we've updated the standard. We've updated the section to be aligned with the latest version of IFRS 3. So that includes the definition of assets and liabilities from the Conceptual Framework. And we've made along the way simplification. So we're not providing the options for non-controlling interest to be measured at fair value, trying to keep it simple. IFRS 10 and IFRS 11, we simultaneous to developing the exposure draft, the board was undertaking the post-implementation review of these standards. So we were able to take the learnings from those standards to help us update the standard. The board decided it would bring in the control model that's in IFRS 10 because that model is consistent with the new Conceptual Framework. But the board also decided it would retain the simplification that says, if you own more than 50% of an entity, then you can be presumed that you have control. and you can just rebut that if that isn't true. So quite a significant simplification that we retain there. For IFRS 11, the board had quite a lot of discussions when we were developing the request for information, and based on the feedback that we got from the request for information, the board is aligning with the definition of joint control, but decided to keep the three classifications of joint arrangements. So jointly controlled entity, joint operations, and joint ventures. For IFRS 13, the SME standard does already require the use of fair value. So the big question was, at the moment, the requirements and the disclosures are dispersed in the relevant sections of the SME standard. Should we bring them together and have one new section and make that section consistent with IFRS 13? So we have updated that. We've introduced a new section because we think that will be more helpful. The SMEs will be able to go to one section of the standard to look at the guidance on how to measure fair value and the disclosures. For IFRS 9, actually, we have a webinar that will be published this week where the staff, the team working on the project, will be talking about what we're proposing for IFRS 9. But in short, the board looked at each of the topics within IFRS 9. So for classification and measurement, the board decided actually the standard is working well. We just had some feedback that sometimes my financial instrument doesn't fit into these examples. So we added a principle based on the SPPI test, but we simplified that. So it's just based on contractual cash flows, and you only use that principle if you've already been through the examples. So we were just trying to help those people that have said sometimes it's a bit difficult. For subsequent measurement, there was a long discussion about expected credit loss. Should the board introduce an expected credit loss for SMEs? And, you know, it was very difficult discussions that we had because we clearly wanted to balance the resources that SMEs have available to them and the benefits of earlier information to users of financial statements. What the board decided was actually most SMEs probably just have trade receivables and some contractual assets, and we'll leave those in the incurred loss model. So we believe for most SMEs, there won't be a change. But where an SME has decided or is holding a different financial asset, a financial asset that isn't a trade receivable or a contractual asset, then actually it would be important that users got information about the expected losses on those financial assets. So we ended up with two models, retaining the old model and then introducing the expected credit loss model for some financial assets. We're also proposing some new requirements around issued financial guarantee contracts. There was a question that had been answered by the SME implementation group. Given the requirements of the second edition of the standard, issued financial guarantee contracts are accounted for at fair value. We heard that this was complex, and so what the board is doing is proposing that they would initially be measured at the transaction amount and then subsequently at either that amount amortized or at the expected credit loss amount. So that's a whistle-stop tour of the very big proposals that are in the exposure draft. There are obviously a number of other proposals in there on some of the smaller amendments, and there are some proposals on some of the topics. A particular topic that we've heard is about some of the pension simplification, and that's an area that you might like to look at. If we move forward, I'll quickly talk about some of the decisions where the board decided not to align. And there were two particular standards that the board decided to defer the decision on whether to align with. The first was IFRS 14, which is regulated activities. Now, this was not really a difficult decision for the board because the board is nearing completion of its project on rate regulated activities. So it clearly didn't want to bring in some requirements in what will be the third edition of the standard that may then need to be updated in the fourth edition. So the board said, let's just wait until this project is completed and then we'll make a decision on this project. For IFRS 16 leases, this was a much more difficult subject where the board needed to carefully balance where IFRS 16 was in its implementation phase, the resources that are available to SMEs and the benefits to users. And actually the board decided to focus on where the standard was in its implementation phase. And actually IFRS 16 is very early in its implementation phase. And so the board decided actually it would be better to wait. There were already quite a lot of significant changes being proposed. So what the board said was we will defer IFRS 16's decision and we'll come back to that standard in the next comprehensive review. And we've heard some mixed views on that, but I think overall the board felt it would be better to just wait. We heard some feedback from users of SME financial statements. So from some of the banks where they take guarantees for SME loans, actually you can't securitize a leased asset. So the importance of having that asset on the balance sheet for an SME may not be the same as for a publicly accountable entity. So that provides a very, very quick overview of what the main proposals in the exposure draft. So let me hand back to Aki.
Yes, thank you, Dr. Lu, and thank you, Michelle, for that presentation. And it's indeed quite a high-level overview of the proposals on the updating of the standards. And I think, I guess the important part of our session this afternoon, of course, is to hear from our ASEAN colleagues about their views on some of these different parts of the consultation of the proposals, Michelle. And as I've mentioned earlier, we do have representative Dr. Lu and Michelle from all 10 of the ASEAN jurisdictions with us this afternoon, and I'm sure all of them will be happy to respond to some of the questions that I believe that you have prepared in some of these proposals. Would you like to refer to the specific questions now, Michelle, with them? Or
so I don't know if anyone has any particular questions that they want to raise first before we go through the questions. Would that be helpful? Otherwise, we can go through the questions.
Yes, I think what I would like to suggest is, Michelle, is if we can go through the questions with the panelists, because I think some of them have indeed responded to us that they would like to address some of these questions. Of course, they will also have perhaps other responses to other parts of the consultation as well, which they believe are also relevant, particularly for their jurisdictions, based on the practice that they have in their jurisdictions. So maybe I would like to suggest for us to refer to the questions, perhaps, Michelle?
Yes. So why don't we start with the first question on, is the IFRS for SME standard currently permitted or required in your jurisdiction? And if it isn't, are there particular barriers that you see to the adoption of that standard?
Yes, Michelle, before we hear from some of our panelists, and I think what's important here is that we do recognize that in our jurisdiction, the ASEAN jurisdictions, the 10 ASEAN member states, we do have a varying degree of the adoption level of the IFRS for SMEs Accounting Standards. Some jurisdictions adopt the standards. Some jurisdictions refer to the standards in establishing their own local standards. So I think we would like to hear for some of our colleagues in the panel right now, about their perspective for this particular first question. So if anyone from the panel would like to address this first question about the barriers to adoption of the IFRS for SMEs Accounting Standard, please.
I know that Malaysia are very active in the IFRS for SMEs standard, and I think maybe Ramil would like to.
Yeah, thank you, Michelle. Thank you, Oki. So maybe I'll make a start in relation to Malaysia's adoption of IFRS for SMEs. So here in Malaysia, the private entities apply the Malaysian Private Entities Reporting Standard. We call it MPERS, which is really based on the IFRS for SMEs revised in 2015, except for certain amendments made to a number of sections, namely Section 1, Section 9, as well as Section 34. So a private entity in Malaysia is a private company as defined under the Companies Act 2016 in Malaysia. And this entity is not required to submit its financial statements to the Securities Commission or the National Bank. It is also not a subsidiary or associate or jointly controlled by an entity that is required to submit their financial statements to the Securities Commission or the National Bank. And for your information, there are almost 1 million private entities in Malaysia. So, well, MPERS and amendments to IFRS for SMEs are really critical for us here in Malaysia. Thank you.
Thank you, Rasmi, for that response. Michelle, perhaps next I would like to suggest maybe to hear from our colleagues from Indonesia, perhaps, because I know that even though IFRS for SMEs is not adopted in jurisdiction, but it is being referred to in the local standards. So I think this would be a good insights from them, especially for the board to get a better understanding from this. Jurisdictions that are perhaps adopt similar approach in terms of their local set of standard when it comes to IFRS for SMEs. Pak Dede?
Yeah, thank you. Okay. In Indonesia, I think we consider IFRS for SME very important because we have many small, micro, and also medium enterprises that most probably will use the features of the IFRS for SME. And currently in Indonesia, we're using the Financial Accounting Standards for non-public accountability entities, which was developed using the previous version of the IFRS for SME. And I think the Indonesian Accounting Standard Board already issued the new Financial Accounting Standards for private entities based on the current version of the IFRS for SME with modification, which allow the entities to adopt in 1 January 2025, because based on our discussion with our regulators and also the future adopter of the standard, that they will need time to adopt IFRS for SME in Indonesia. I think one area that would like to underline is in the scope of IFRS for SME, there is an exception for entities with public accountability. While in Indonesia, there are small banks that are providing loans to the public that will be under the jurisdiction of the Financial Services Authority as the public accountability enterprises. So they will need to use the exception in the standard to be able to use IFRS for SME in Indonesia. I think that's it from Indonesia. Thank you, Oki, and also Michelle and Dr. Liu.
Thank you, Pak Dede, for sharing that insights. Michelle, Dr. Lu, I can already see a hand raised by our colleague from Myanmar, Mo Chao.
Thank you, Oki. In the context of Myanmar, in a few months after IFRS has been prescribed in 2009, to be exact, 9 July 2009, we, Myanmar Accountancy Council, which is the regulatory, the accountancy body, issued a notification in 2009, October 2009, and we prescribe Myanmar MFRS, in Myanmar Financial Reporting Standards for SME, to be effective starting from 2010. Then we just changed the I into M. Since then, we haven't updated our Myanmar Financial Reporting Standards for SME. So in 2018, the Myanmar Accountancy Council has decided, to allow those SME to use the IFRS for SME updated version without any changing and modification, which will be effective in 2020, 22, 23. So even, the meaning of SME is as defined in the SME standard, which means that those entities which do not have public accountability and issue general purpose financial statements. So they are now allowed to use IFRS for SME. So that's my our senior view. Thank you very much.
Thank you as well for sharing that insight with us, Mocha, about implementation of IFRS for SMEs in Myanmar. Next, I think I can see a hand raised by our panelist from the Philippines, Mr. Roel Lucas.
Yeah, thank you, Oki, and good afternoon, everyone, Michelle and Dr. Lu. So for the Philippines, it's IFRS for SME is actually a required standard. So it's save only for a few instances where there is an option required. But essentially, it is a required standard for those meeting certain quantitative and qualitative requirements set by the local regulators, right? However, there are some options provided for some subsidiaries of certain entities. Now, an example of that is if that particular subsidiary is reporting to an entity outside of the Philippines that is reporting on a full IFRS. So there could be an option for that. So, but by and large, it's a required standard for those meeting the requirement. No, there is another locally developed accounting standard that is largely anchored for our IFRS for SME, but this is applicable for those entities that are the numbers of which are really below the threshold. I think one of my observation since Philippines adopted IFRS for SME is that for those that were given the option to actually apply full IFRS instead of IFRS for SME because they meet the option given by the regulators. I think there are certain, in a way, some pressure coming from their parent companies who are reporting on full IFRS. They do not. They want to get away with the extra activity of converting. When these numbers are consolidated by the parent company, so they don't want that, and that is the reason why for those SME which have an option to either adopt IFRS for SME or full IFRS, they for some instances they are forced to adopt the full IFRS instead because of some pressure from the parent entity. So I'm just sharing these observations that I have here for the Philippines. That's all. Thank you.
Yes, thank you, Sir Roel, for sharing that. And I think a bit also based on our observation in the region, Dr. Lu and Michelle, about this question on the barriers to adoption. I mean, based on our observation, certainly it's not necessarily about the issue in adopting the standard, because in some of the jurisdictions, it's an issue about understanding the need of the jurisdictions in terms of, especially in relation to in describing the scope of the use of the reporting framework itself. So of course, when it comes to defining SMEs, for example, there's a challenge in terms of definition of SMEs in certain jurisdictions, and this relates, of course, to the reporting framework that will be required in that particular jurisdictions. So even though the standard of the IFRS for SMEs Accounting Standard is not being adopted fully as a reporting framework word for word in some of the jurisdictions, but some of the jurisdictions actually use them as a key reference in their local reporting form. So essentially, it's almost a similar set of standards, but it's just about a matter of describing the scoping of the user of this particular set of standards. Mr. Udom from Thailand, TFAC.
Yes, thank you, Aki. In Thailand, does not adopt the IFRS for SMEs because any jurisdiction in Thailand have a different size and many legal entities and the several group of the financial statement user. Most of Thailand legal entity have more than 800,000 entities required by law to prepare the statutory audited financial statement and submitted submission to the government agency as a Department of Ministry of Commerce. And mostly legal entity financial statement users are families, business and small and medium entity that use a financial statement for only manage business performance and not the submission for the lenders and for the capital markets, because in the subsidiary in Thailand have the, even though in subsidiary in Thailand have legal entities and they prepare financial statement as the IFRS, so that Thailand have a national accounting standards for non-publicly accountable entities named as the IFRS for NTAEs that developed from the IFRS version 2009 and IFRS for SME for some section, and provide the fair value option for revaluation of fixed assets and investment properties. And if the legal entity, when the legal entities have the special business transaction, for example, business communication, hedging, accounting, service concession, agriculture, or finance, functional currency, Thailand will provide the option for those legal entities have apply IFRS for the special business transaction. That why Thailand will not adopt IFRS SMEs like have a need have required the national accounting standards in Thailand, that similar to IFRS version 2009 and IFRS SME. Thank you.
Yes, thank you, Udom, for sharing that. Dr. Lu or Michelle, do you have any observation or do you have perhaps any follow-up questions that you would like to ask our panel with regard to this specific set of questions?
In terms of observations around subsidiaries, and subsidiaries are a sort of special class of entities, and the board does have a separate project at the moment where it's working actually towards an IFRS standard. So we're post exposure draft, where we're looking at actually to address the problems that you were talking about, where you have reporting to a full IFRS parent, so you need the recognition and measurement, and that actually, when we were, one of the proposals in the exposure draft is to remove the option to fall back to IAS 39. And we're actually proposing to remove that option because we'll have this standard out. And I think the other thing is, from the work that I did with the Emerging Economies Group, where we looked at the accounting standards of frameworks in many of those emerging economies, and we discussed them amongst the members, it is important that a jurisdiction looks at the needs of its jurisdiction and then has a framework that fits within that jurisdiction. And I think, you know, IFRS standards and the SMEs, that's why the board recognised that there are different needs within the jurisdiction, and it's the jurisdiction. So I think sometimes one of the things that we discussed was, you know, if you open the IFRS for SMEs to some of those smaller banks or perhaps the credit unions, you do need to look at the disclosures that go alongside those entities. And certainly when I was in the UK, where they did widen the scope, and the scope in the UK of the IFRS for SMEs is wider, we added in some disclosure requirements. And that doesn't stop you asserting compliance with the IFRS for SMEs because you're adding in disclosure requirements.
So, Dr. Lu?
Yes, I think thank you very much, and thank all of the panelists. I think all the message information we received very helpful. Just for one clarification is that I understand in ASEAN region, actually there's a lot of large numbers of micro entities, you know, very small family business, small business. So in regard to this, because I think even applying IFRS for SME accounting standard, it's still costly because it's still a lot of complex accounting treatment in place. So I would just remind you that actually the IASB also developed a separate accounting guidance for micro entities, which is available on our website. Obviously, we are also thinking whether we need also, at the meantime, to update that accounting guidance for micro entities. So this is the first thing. Second thing, I just want to confirm or double check with Mr. Lo Lucas from Philippines, and it's also a question related to the subsidiaries. You know, I just want to double check the accounting option, the standards those subsidiaries can apply either IFRS for SME standards or full IFRS accounting standards, whether those subsidiaries are eligible to apply this accounting policy option, only limited to those foreign parent, or actually the parent which needed to apply full IFRS accounting standard, but also their domestic entities as well. Because I remember previously Law gave an example that parents are foreign entity, and then continue whether I think it sounds like also apply to those parent companies actually are also domestic companies as well. I just want to double check whether my understanding is correct.
Yeah. Dr. Lu, yeah, thank you for that clarification. Yes, the regulator allows or provided an option for all subsidiaries that are reporting to a parent that is publishing financial statements in accordance with full IFRS. So that includes a domestic or an international parent as well.
Thank you.
Thank you very much, everyone, for that, Dr. Lu and Michelle as well. And I think, Michelle, should we go to the next set of questions? I think we do have a list of questions that I believe yourself and Dr. Lu would like to hear some thoughts from our panelists, right? I mean, unless you have any other observation or follow-up question to this first set of questions, general question about adoption of IFRS for SMEs Accounting Standard.
No, I think we could move on to the next questions. I think that was really helpful for us to hear those comments. So thank you very much.
Thank you. Yes, Michelle.
So the next question we ask is actually a question that's quite a technical question. And this was a problem that happened in full IFRS accounting standards, as well as in the SME standard, in that when the board wrote the new conceptual framework, it updated the definitions of assets and liabilities. So when we updated the SME standard, we brought in those new definitions of assets and liabilities. But there are two sections in the SME standard, which were also two standards in IFRS, where the board decided it would be better to continue to use the previous definition, so the old definitions of an asset and a liability. So in the SME standard, there's section 18, intangible assets, and section 21, provisions and contingent liabilities. And we're proposing to keep the old definitions for those sections because the board was a little unsure whether there would be any unintended consequences. And so the question that we had for the panelists was, do the panelists agree with the approach the board has taken here, which really mirrors the approach the board took in full IFRS accounting standards?
Is anyone from the panel who would like to address that? Perhaps other panelists who haven't had the opportunity to participate in the discussion?
I have no objection. I do agree.
Thank you, Mojo. Ankian from Singapore.
Yeah, thanks, Oki, and hi, Michelle. Yeah, could I try to understand the reason for the deviation? Is it because it was meant to so that we can have some of the standard that complies with this exception framework? So the story is, are we keeping this old definition so that we can have some of the standards still there and it doesn't contradict?
Yes, it was really about a concern around potential inconsistencies that the board was concerned about, both in full IFRS accounting standards and in the SM. I guess when we were looking at this, we looked at what the board had done in full IFRS standards, and we said, well, actually, we think we need to mirror that, because if the board has concern there, there is no reason that it wouldn't have concern here. I mean, in some instance, that doesn't always hold. The correlation between full IFRS and the SMEs doesn't always hold. But in this instance, we were concerned that those consistencies might exist. I mean, there are, in terms of the feedback we've heard initially on this, I think overall people accept, yes, it's the best way to go. But we have heard some concern about, there being two definitions being used within one standard, if I'm honest.
Yep. Michelle, yeah, I also would like to add another background. I think, as Michelle said, obviously, it's really would like to make the standards different section in IFRS for SME standards being consistent. Another background is that on the full IFRS accounting standard, conceptual framework is not part of the standard itself. So that means even the IASB updated the conceptual framework, introduced new definition of asset liability. Actually, the definition of asset liability included in IAS 38 intangible assets and IAS 37 provision and the contingent liability. Those separate standards are still using older definition of asset liability. But that will not cause inconsistency among the IFRS accounting standard, because conceptual framework is not part of the standard itself. The problem is that for IFRS for SME accounting standard, section 2 concept or those principles are the part of the standards. So that's the consistency issue arising. Because section 2 already revised the definition of asset liability, and the section 18 and section 21, currently we're still using older definition. So there are two ways we could update the definition in section 18 and section 21. But actually we update those definitions ahead of 4 IFRS accounting standards, whether it's consistent with our alignment principle we applied. And secondly, that is not simply updated definition. It will cause some kind of unintended consequences because the definition change, maybe it will affect the recognition and the other aspects of those assets and liabilities. So this is why currently we still keep the old definition of assets and liability in section 18 and 21, and also try to maintain the different sections, consistent with each other. But that is just a little bit because of the status of the conceptual framework in IFRS 4 SME Accounting Standard is different from 4 IFRS Accounting Standard.
Right. Yep. Thank you. I think that background is definitely very helpful. So on that, I suppose it makes sense if we want to look at section 18 and 21 together with this definition of assets and liability, rather than just looking at definition of assets and liability on its own.
Aaron from ACCA.
Thank you, Pak Oki. Hello, Dr. Lu, Michelle, and all the fellow panelists. I just want to add on some views that I've heard during outreach that I've attended or hosted. Some comments were, when we look at the definition of the asset or liabilities in section 18 and 21 compared to section 2, one may not see them to be very different. So on that, there were some views on why still keep the old definition. But I think all in all, on the balance, maybe I've been speaking to groups of accountants, everyone seems to err on the side of caution and say, all right, since they are still different, let's maintain the old definition. And I think the reason is on what Dr. Lu explained earlier. We do not know what unexpected consequences it will have if we were to change to the new definition now. But on that note, it's like section 21, the definition of liability doesn't get the same amount of prominence as other paragraphs because it's written in a footnote, which some commentators say it could be missed. So although there's an overriding principle in section 2 that we should look at requirements in the other sections before consulting section 2, but if one were to miss that footnote in section 21, for example, then you would then go back to section 2 and made a mistake. So, so some suggestion is perhaps giving the same prominence by putting the definition in the body of the section. Thank you.
Thank you, Paran, for sharing that. I think your experience in conducting your outreach would certainly, hopefully, help us as well in our discussion this afternoon. Because I think the other objectives, at least from AFA's perspective in organizing today's webinar, is to encourage our stakeholders as well to participate in this consultation and, of course, perhaps provide their comments to the exposure draft, and hearing from fellow accountants from other jurisdictions about their views on some of these topics hopefully will sort of trigger their thoughts in terms of these different topics. So again, panelists, if you have any thoughts, any comments on this different aspects of the discussion, do share this afternoon. So everyone else here, our observers, our audience, could also hear from you. So perhaps they could also bring all of this back to their organizations, the institution, and then try to discuss these different issues before they decide to provide their comments to the exposure draft. So thank you for sharing that information with us, Pak Aaron. Michelle, Dr. Lu, any other observation or follow-up questions for this particular question that you would like to sort of further take from our panel before we move to the next set of questions?
Not from me. So we could move to the next set of questions. And actually, the next set of questions are on financial instruments. And we have two questions here. One is, as I discussed, the expected credit loss model and how the board has brought in that model for only certain assets. And let me just say the model that we're bringing, that is being proposed in the exposure draft, is based upon the simplified model that is in IFRS 9. So it's not the general model, it's the simplified model. So I should stress that. And so the question we're asking is, do you agree with this proposal where we've got these two models? And the second question we're asking is around relevance. So the issued financial guaranteed contract. Are you aware of SMEs issuing financial guarantee contracts? And I think what we've, in relation to that question, what we've heard during this outreach period is that yes, SMEs issue financial guarantee contracts, but they're quite often to related parties. So I would be interested to hear if those contracts are actually that are issued are to related parties.
Yes, thank you, Michelle, for those questions. Anyone from our panel would like to respond to those two questions, or perhaps any of the questions under sections 11?
Yeah, if I can start first. So I think I will just combine the response for both questions. And if I can start on the financial guarantee contracts first. So this is this is common in Malaysia, where, as you mentioned, that typically a parent company issued the financial guarantee contracts to its subsidiaries, and most of the time when they issued the financial guarantee contract, this is not they do not charge any premium to the subsidiary. So really we are looking at in terms of initial measurement of so nil in terms of initial measurement. And a lot of our SMEs, they do have financial assets that are trade receivable as well as contract assets, and it is good to know that the amendments in the ED mentioned that will be maintained under the incurred loss model rather than moving to the expected loss model. So I think the question is really where the parent who just have trade receivables and contract assets, and then use incurred loss model as for the impairment exercise, then they also do have this FGC, but because they issued FGC, hence they then need to apply the expected loss model. So we understand in terms of the reason of getting the FGC to be subsequently measured as proposed, but I think the challenge would be, it will be quite challenging for these entities who do not have other types of financial assets other than trade receivables and contract assets, but they are still required to measure the FGC and to apply the expected loss model when it comes to the subsequent measurement of the FGC. Thank you, Michelle.
Thank you.
Thank you, Rasmimi. Roel?
Yeah, thank you, Oki. So for us here in the Philippines, so yeah, we welcome the proposal to retain the incurred loss model for the trade receivables and contract assets arising from revenue from contracts with revenue contracts with customers. We just have a certain concern, though, for introducing the ECL method, although using the simplified approach or the simplified method under IFRS 9 for all other financial instruments measured at amortized cost. No, we observe, at least based on our observation, that for SMEs, it's still very common for them that there are a number of intercompany loans that they provide to other entities within a group. And we believe that requiring them to measure the ECL, to measure and apply the simplified method for recognizing ECL would introduce complexities, no, in the simplified in the way they are currently accounting for them right now. So I think it would be better, no, if there would be a single measurement model for all financial assets that are measured at amortized cost for those adopting IFRS for SME. That's all, Oki. Thank you.
Yes. No, thank you. Thank you, Sorel. Pak Dede from Indonesia.
Yeah, thank you, Oki. I think the problem for this question lies in the wide range of potential users for the IFRS for SME. In certain jurisdictions, I think the proposal from IASB is very useful to introduce the ECL for certain financial assets. But in other jurisdictions, such as, for instance, in Indonesia, the typical user of the IFRS for SME, their investors and also their owners do not, and the user of the financial statements do not typically require the information provided by the ECL model, including for financial assets other than trade receivables. And so I think the problem lies as to whether the wide range of the enterprises under the scope of IFRS for SME. So in Indonesia, our view is that similar with a role from Philippines, that the IFRS for SME should have been only using the incurred loss model, because the sophistication of the financial statements user does not require those information offered by the ECL model. Thank you, Oki.
Thank you, Pak Dede. Enkian from Singapore.
Currently what we feel is that the ECL model require a lot of forward-looking judgment, and this need to be collaborated with a lot of estimate. So for SME that are pretty much budget constrained, they really haven't got the money to buy a good crystal ball, find out what is the ECL assumption. And so I think currently incurred loss model is still pretty much the favored model. And also, I think a lot of the judgment is also for the SME situation is made by the owner and car management. So they wouldn't be able to have the vehicles to source for all this information in order to beef up a proper ECL model.
Thank you, Enkian. Dr. Lu, Michelle, any brief response to any of the inputs provided by our panel?
Yeah, I just want to share a little bit information, because currently IASB are also conducting PIR of IFRS 9 impairment part. And last week I had participated in an outreach meeting with some Chinese stakeholders. So even, I think it's reasonable, because even for those big banks and some big companies applying for IFRS accounting standards, one challenge they have is that the availability of those data, including the forward-looking information. So I think understandable, listening to the comments made by previous panelists, the data and the information, obviously, and who are going to use those information. Yeah, I think very helpful. Thank you. Yeah, it's it's consistent with what we heard from other stakeholders.
Thank you for sharing that insight, Dr. Lu. Michelle, anything from you?
No, not from me.
Okay. In the interest of time, Michelle, should we proceed to the next question?
Yes, I think that would be helpful. So this is a question around the alignment with IFRS 11. So as I explained, the board decided to align the definition of joint control, but to keep the three types of classifications of joint arrangements. So that's jointly controlled assets, jointly controlled operations, and a jointly controlled entity. Now, this was an area when we developed the RFI where the board had a lot of discussions, but we didn't hear that much feedback to the request for information. So the board proceeded with what it had discussed in the request for information. And we would just like views on whether you agree with keeping these three classifications.
Thank you, Michelle. I'm wondering if there's going to be any feedback at all from our panel this afternoon on this very specific question. Or before I go to the other panelists, I just want to make sure, Sir Roel, is that a new hand raise or is that from the previous question? Just want to make sure.
Sorry, it's from the previous question.
Okay. Okay, thank you. Okay, anyone from the panel who would like to contribute their response to these particular questions under section 14, joint arrangements? Or perhaps if not, if maybe Pak Aaron, if you have any insight that you can share based on your previous outreach activities on this particular question. I mean, what were you been hearing from your constituent with regard to this question, Pak?
Thanks, Pak Oki. In fact, when we come to this topic or this particular question, it's always been quiet. So I think that's also an insight that no one is talking about it. And it got me wondering if joint arrangement is really prevalent. Is a lot of companies applying it? Why no one is discussing about the proposed amendments? So of course, when I first look at the proposal, I thought aligning the definition would be great. I support that. However, I had some doubts over retaining the three classifications. I thought I would suggest aligning with the classification in IFRS 11 that is with joint ventures and joint operations. But I've not been getting much feedback on this, so that's where I am at the moment.
Oh, no, thank you for highlighting that, Aaron. That's interesting enough. So anyone, yeah, Michelle?
Yeah, I think that's an interesting point because it's not something I'd thought of, because obviously when we were updating the standard and we were asking about relevance, we didn't say are joint arrangements relevant to SMEs, because we said there's already a chapter. The question is the new definition more relevant? And we felt very much, because we were bringing in the definition of control, we needed to bring in the definition of joint control. We didn't go back to the drawing board, which is perhaps what Aaron is saying, that if we'd have gone back to the drawing board and asked a different question, we would have got a different answer.
Yes. Well. Any response from you, Aaron? I mean, is that what you referring to?
Yeah, I think yes. So I think Michelle has got it right, and I was wondering about that as well. But it's not the scope of this exposure draft.
Yeah. But it's a good point, Aaron.
Yes. Well, if there's nothing, I mean, just a final check, I guess, Michelle, with our panel. Anyone from the panel at all would like to share anything with regard to this particular question under this section? Well, I'm sure if anyone was think of something, they could always highlight it in your comments to the exposure draft later to the IASB. But I don't think we have anything on this particular question. Michelle, would you like to go to the next question?
Yeah, so the next question is a more emotive subject, I think, because both in the first comprehensive review and in the second comprehensive review, we heard feedback that SMEs would like to be able to recognise their internally generated intangible assets. But the board had, when it had developed the standard in 2009, said this is a simplification, not requiring you to recognise intangible assets and do the assessment of whether the intangible asset met the definition of an asset. It is a simplification. So in the first review, the board said, no, we think we should keep the standard as it is. However, when we heard the same requests in the second review, the board said, well, actually, maybe we need to gather some more information. So whilst this isn't a proposal in the exposure draft, there is a question that is saying, do you think the board should do this? And the reason we did this was by putting the question in the exposure draft. If we got positive feedback, we'd already gone through the due process of gathering information, and we could make the amendment to the standard. So that is the background to this question. And what we're asking is your views on whether we should introduce that accounting policy option. Now, introducing an option would be different from IFRS, but it would be an accounting policy option.
I think we can some comments. I think maybe we can start from Enkian, Singapore.
The policy option would be very much welcome because a lot of the SMEs are in the startup, and there's a lot of investment, development, tech startup as well. So a lot of it has currently been expensed, and they cannot reflect that on the balance sheet. So I think this is where it's coming from, because there's just too many startup in the tech space, and they have incurred a lot of development costs.
Thank you, Enkian. Rasmi, I think you looks like you're agreeable to that statement. Anything that you'd like to add?
Yeah, so just to add, I totally agree with that statement. Just to add that although so we also welcome the option, but in terms of well, given the 6 criteria under the IAS 38, so if this is really finalized to be included in the standard, we think that detailed guidance would be necessary to guide the application of the 6 criteria. And another additional point, well, not directly related to the development cost, but here in Malaysia, we receive queries in relation to whether certain items or transactions on technology-related transactions are intangible assets, such as cloud computing arrangement. So accordingly, whether some guidance could be included in the standard or in the education materials. Thanks, Oki.
Thank you, Mas Mimi. Maybe Mo Chow?
Yeah, I'm also in favor of adding an accounting policy option, so that will permit SME to recognize intangible assets, The reason is that even when the IFRS for SME was first introduced, prescribed in 2009, for example, the revaluation model for PPE was not allowed, but in the revised, in 2015, it was allowed. So I think I'm in favor of adding an accounting policy option for the development costs. Thank you very much.
Noted, Macam. Mr. Royal?
Yeah, thank you, Oki. So I think, and I agree with what Inken earlier said, that we need to take a look at the nature of the SMEs, and I think a big chunk of them would actually pertain, or a significant chunk of them would actually pertain to entities that are in the startup, and might, development costs would be a relevant amount for them, and giving them an option would actually support the concept of flexibility this preparers of financial statements under the IFRS. So it would be they would have more flexibility in taking an option to either capitalize or to expense it out without necessarily introducing an undue cost in the process. Thank you.
Thank you, Sir Roel. Any immediate response or follow-up question from you, Dr. Lu, or perhaps from Michelle? No, if not, I can see a hand raised from Pak Aaron.
Thank you, Pak Oki. I want to share some reflections on this topic. While the option is welcome, I mean, I've got mixed views as well in my outreach. Some of the mixed views were regarding whether this will be a requirement, like a hierarchy in the full IFRS, or it will be really an option that entities can choose. And so glad Michelle has clarified this will be an option, but even is an option. The feedback I've heard is that meeting all the 6 conditions or criteria in IAS 38 can be quite challenging, even for larger entities applying the full IFRS. So things like how to meet the technical feasibility, the ability to sell the asset, SMEs may require guidance on what does that mean and how do I meet these conditions in order to allow them to capitalize the development costs. And otherwise, if it's just the 6 conditions as is, we may see the status quo, as in SMEs will end up having expanding the development costs simply because they can't meet the conditions.
Thank you, Pak Aaron, for sharing that. Yeah, Dr. Lu.
Yes, Aaron, thank you very much for your comments, particularly relating to the 6 criteria included in IAS 38. I have a question. When you engage with those stakeholders, obviously they say, okay, there are some difficulty to implement that 6 criteria. It's totally understandable, particularly for SMEs. I wonder whether they have any recommendation if for SME to apply that, and any improvement we should make to make those criteria clear, and when those criteria, obviously it's already clear, but it's operational or in terms of cost benefits consideration, something like that. Whether to have any recommendation or suggestion, that will be helpful for us to look at it.
Unfortunately, Dr. Lu, I didn't get any substantive recommendation that I can share with you, except that the usual request for application guidance on how do we interpret this. One comment I can remember was around not leaving too much to the discretion of the companies, and that's because a lot of SMEs they may not even have full-time accountant. So making judgment is not the forte of the business owner. So that's one thing, yeah.
Anything from you, Michelle? Any follow-up questions or any response? Yes, Michelle?
I would agree with what Jing Chao said, that if it would be good if you could identify or make suggestions around how we could simplify those criteria. But it's good feedback. It's very helpful. Thank you.
I think that's something that all of our panelists can take note of as well. I mean, there's still obviously time for them to go back to their respective organizations and perhaps to try to get more information, particularly for this, and hopefully this will be reflected in their comments to the exposure draft later. So I think this is one homework for us in the region, so to get some information about this that could certainly help Dr. Lu and Michelle as well in their further deliberations. for this consultation. Oh, before Michelle and Dr. Lu, before we go to the, I guess the last set of questions, I would like to perhaps to invite you to refer to, we do have a couple of, comments or questions from our observers of audience through the QA function. And I think one of the response or comments is in relation to section 4, something that we've discussed earlier. So I don't know whether you would like to respond to this. So let me just read the comments to you. So I think it will make some inconsistency in accounting practices if definition of joint arrangement aligned to IFRS 8, but the classification retains the old version, meaning the old classification. It may be useful for the board to explain the reasons behind this particular revision. I don't know, maybe this is something that actually you probably have a touch upon when we discussed the earlier section 14, but maybe if you want to sort of further emphasize again about the board's explanation about the reason behind this, maybe Dr. Lu or maybe Michelle.
So on the joint arrangements, I think the board, I think it's kind of interesting timing actually, and it may be something that we need to think about when we are redeliberating the proposals in the exposure draft, because at the time the board were thinking about this in the request for information, it was before it had undertaken the post-implementation review of IFRS 11. And at that stage, the board felt they'd heard some feedback that the judgment calls around IFRS 11, and particularly around the classification of whether something was a joint venture or a joint operation were quite difficult, especially when you had a separate legal entity involved. And so the board felt actually keeping what was in the SME standard would be simpler. It would be less disruptive. However, when we look at the feedback that we then have received on the post-implementation review of IFRS 11, that has more been, okay, it was a bit difficult in the beginning, but we've made those calls, we know what we're doing. There was additional guidance provided by the board, and the standard works as was expected now. So I think we will need to have another look at this decision with the board and discuss with the board the feedback that we concluded on IFRS 11 and the tension between having 3 models in the SME standard and 2 models in full IFRS. That will be something I think we need to look at. I would say in terms of if you're looking for more background information, there's a huge amount of information available on our website, but also the basis of conclusions that sits alongside the exposure draft very clearly goes through each of the principles, the relevance, the simplicity, and the faithful representation. So how the board formulated its decision. So it is, and it's quite easily laid out. You can open it, find the section you're looking for, find how the board made the decision. So I would suggest if you want a bit more background, it is worth opening the basis of conclusions.
That's right. The basis of conclusion for any of this consultation or discussion is always a good source of information to get some insights about what's happening at the board level in terms of the discussion. So as what Michelle has mentioned, I will also encourage everyone in this call to use that as a source of information as well, to get a better understanding about some of these questions and the decisions that the board has made, or the proposals that the board are considering in terms of this different consultation. So do check the basis for conclusion. So Michelle, whilst we are on this, I mean, in terms of the response from some of our observers audience, we do have another. This one is actually a question. I don't know if you want to address this before we go to the last final set of questions. Maybe you or Dr. Lu would like to address this. So this is on revenue recognition actually. So let me just read out the question. Maybe you want to respond to revenue to that similar to, I think this is the MFRS. I would think that this is an equivalent of the full IFRS. Are complicated and not suitable for SMEs. Certain information may not be available by SME and increase the cost of compliance by SMEs. will simplified revenue recognition be introduced instead of following MFRS, or I would again guess that this will be the full IFRS? Dr. Lu, or perhaps Michelle, would you like to respond to that question? So will simplified revenue recognition be introduced instead of following the full IFRS?
Yeah, okay. Yeah, maybe I can answer, and maybe Michelle also can answer. Okay. Yeah, in terms of revenue recognition, currently we, based on IFRS 15, but not necessarily identical. We simplify a lot. So that means actually we did not introduce IFRS 15 into IFRS for SME standards. We use the 5 steps. Obviously, it's same as in IFRS 15, but in every steps, and particularly something relevant to the judgment, uncertainty. In our proposal, actually, it has been simplified a lot, and the reason and those areas simplified also are explained in the basic conclusion. So I wonder whether that is okay, or whether that's a participator would like to, because he only mentioned the simplified, he preferred a simplified revenue recognition. From our perspective, we really introduced simplified revenue recognition in our proposal in the exposure draft, not exactly same as IFRS 15. Yeah, that is what I would like to clarify. Michelle, would you like to add anything? Yeah.
So the only point I would add is that one of the areas we're going to do some field testing as a team is the revised section 23. So we're working on developing a questionnaire that we would like to send to preparers. I think we've only just started working on the questionnaire, so it'll be a little bit time yet, but we would be very interested in working with any of you who could help us identify preparers who can work through the questionnaire to help us field test what is in the revised section 23.
Thank you, Dr. Lun. Thank you, Michelle, for those responses. Well, Michelle, in the interest of time, again, I know we are short of time. Would you like us to go through the last set of questions under section 19?
Well, the last set of questions, the first question is about step acquisition. So this was an area where we had mixed response from the request for information, our SME advisory group, where some people felt that SMEs did undertake step acquisitions and it would be better if the standard was expanded and these requirements were brought into the standard. Other people said, well, actually, we don't think step acquisition, SMEs do undertake step acquisitions. So we would like to hear from yourself in terms of that first principle about relevance. Is it relevant to bring in the requirements for step acquisitions? The second question talks about the option. So when we simplify the standard, we often eliminate the option that is the more complex option. Measuring non-controlling interest at fair value is considered the more complex option, and we proposed to remove that option. Now, the problem is we get some feedback. Oh, well, that's not fair because full IFRS preparers have got an option and SME preparers haven't got an option. It's always a difficult balance. So those are the last 2 questions.
Thank you, Michelle. Anyone from the panel would like to respond to those questions, or any of those questions? Excuse me. Yes, Enkian.
Yeah, I'd like to discuss about the step acquisition because, if we are going with the full IFRS 3 on the step acquisition, that means we have to do all the fair valuation of the acquired assets and liability, which currently the existing standard doesn't require for acquisition, because then you have a goodwill difference which you amortize and that kind of solve the problem. So I thought this should be aligned with the if the whole business combination is to be aligned to IFRS 3, then yes, I think we should go with this because conceptually it makes sense. Because the whole concept is whether you have control or no control. You've got control, you dispose everything that you previously owned and you remeasured everything at fair value. Yeah, so I thought this should be aligned with the overall standard of IFRS. What the standard decides to take.
Thank you, Enkian. Anyone else from the panel would like to add? Or perhaps any follow-up questions from Dr. Lu or Michelle? Oh, Enkian.
Yeah, sorry, just and I really appreciate the concept of amortizing goodwill. I know it's a debatable question.
Yes. Well, Dr. Lu or Michelle, would you like? Do you have any, I guess, follow-up question, or if you want to further specify this particular questions to our panel, perhaps to further dig into their sort of, I guess, well, thoughts or perspective that they can share about this, particularly for these two set of questions. I mean, anything specific that you'd like to hear from them?
Can I ask? Yeah, can I ask further question in terms of introducing step acquisition, because applying the step acquisition requirement based on IFRS 3, obviously, those previous interest held by the entity need to be remeasured at fair value as Enkian mentioned, and the changes of those fair value will go to the P&L. Suppose those shares or interests are not publicly tradable, particularly for SMEs. I wonder whether you have any difficulties in terms of measure those fair value and in terms of reliability of the fair value. Yeah, this. So I just want to particularly, for SMEs, just want to double check. Do you have any views on this? Yeah.
Yeah, definitely. That's a challenge, and I think it's not favored because the fair valuation itself would cause a budget constraint on the SME. And if the SME would try to do it themselves, then yeah, there's a highly judgmental, which you might not get the right number.
Thank you, Enkian. Any final opportunity for the panel to share their thoughts on this particular questions? Yes, Aaron.
Thank you. Okay, I was trying to listen to others instead. But, oh well. So some feedback I've heard is that it feels like the right thing to do, because essentially this previously held interest now becomes part of the consideration to acquire the acquiree. But the challenge is exactly as what Dr. Lu pointed out, is SMEs are more likely to acquire another SME or unlisted entities. It's the challenge in determining the fair value. And I think that's where the holdback is. So on one hand, support the principles, but on the other hand, the challenge of getting the fair value. And on the point about measuring non-controlling interest at the proportionate share of interest, so far I've heard support for this method rather than the fair value method. So it again comes back to the point of for SMEs, it's unlikely for them to be acquiring a listed entity, and so measuring that NCI, that non-controlling interest at fair value, may not be suitable for SMEs or users of their financial statements. And even some commenters or respondents said that when they work with companies applying full IFRS, even those companies choose this method of proportionate share of interest rather than fair value. Thank you.
Thank you, Aaron. Any final one final opportunity for the panel to respond, perhaps? Or perhaps if anyone from the panel would like to share their general thoughts to Dr. Liu and to Michelle about the consultation, about the proposals. Perhaps if we don't, I mean, if we didn't refer to any, I mean, we refer to some of these specific questions, but of course, if you have any general comments that you would like to share with Dr. Liu and Michelle, perhaps on the exposure draft before we close. Yes, Mochao.
No, I just want to say a big thank to the Michelle and Dr. Liu, for your time and effort, and also SME implementation group and all the participants. In fact, that kind of discussion and webinar is very useful to us, and we should continue. Okay, that's all. Thank you very much. All.
No, thank you, Mochao. Well, if there's no further comments from our panel, I think Dr. Liu and Michelle, would you like to give me the opportunity to close? I think all in all, I think it's been a good sharing and discussion with our panel. And I'm sure, again, referring to what the point that I've made earlier, one of the objectives of this session is to encourage our stakeholders to provide their comments. But well, first to bring all of this back to their organization so they can have further discussions. But all of these questions and other questions presented in the exposure draft as well. So they can bring all of this back to their organizations and then discuss. And hopefully at the end of the day, they will come up with a comment letter that we will submit to you, Dr. Liu, and the board for your further deliberations on this particular consultation. Or any last, or I guess, message or comment from you, Dr. Liu, or from Michelle before I close?
Thank you, Aki. I just want to thank you, Alpha SCA, and all the panelists for your valuable comments and particularly insights, information and the message shared with us. They are very, very helpful. Thank you very much. And obviously, we are looking forward to your comment letters. The comment period will end 7 March 2023. Thank you very much again. Thank you.
Thank you, Dr. Liu. Michelle?
Yes, I would like to reiterate what Dr. Liu has said, in that it's been a really, really helpful discussion, and we are looking forward, both myself and the team that have joined me today, to receiving your comment letters. And please do fill in your comment letters to provide us with examples. Quite often people make statements, but it's useful when we can have examples. So do feel free to provide those examples so that we can get more color behind the comments that are being made.
Point taken, Michelle. So comments and examples. So take note of that, everyone. So yes, plenty of important feedback from our ASEAN experts today. I believe will further contribute to Dr. Liu and the board deliberation on the proposal. So it's crucial for the ASEAN voices to be heard in important global consultations such as this. So again, everyone, I would like to encourage you to bring this back to your respective organizations and prepare your, have your discussion and prepare your comment letter and submit it as what Dr. Liu has mentioned before, the latest by March 7, 2023. So ladies and gentlemen, that concludes our webinar today. I hope you find the sharing and discussion informative and useful. But before we end, I would like to invite you to share your feedback to our webinar today. So kindly refer to the link and QR code presented on your screen right now. So if you could take a quick photo of that QR code, or maybe you could refer to the screen, the link provided in the screen. So do share with us your feedback. So we could use them, so we could look at them, and then perhaps even to consider them in our, as part of our efforts in continuously improving our webinars. So your feedback would be very much appreciated. So on behalf of the organizers again, so AFA, IASB, and ACCA, I would like to thank every one of you, the presenters, panelists, and everyone attending the webinar today. Thank you again for your participation. Please do not forget to follow our social media platforms on Twitter, LinkedIn, and Facebook. for more information about our events, activities, and latest information about the ASEAN accountancy professions. So with that, my name is Oki Pratsama. I look forward to welcoming you to our next event. Thank you.
Thank you.
Thank you, everyone.
Thank you.
Thank
Bye.
you,
Dr.
Oki.
Lu.
Thank you very much.
Thank you.
Thank you.
Aaron. Thank you, everyone.
Thank you.
Thank you.
Thank you. Thank you. Thank you.
Recording stopped.